Welcome back, everybody. Thanks for joining us again. We are really happy to have you with us today for another exciting episode full of, chock full of knowledge and real estate stuff. So excited to get to that. And as always, with me here again is Sandy McKay. How are you, Sandy?
Fantastic, Rob. Excited to be here again. And, we're getting into some interesting real estate stuff in the market and the world. So I think we'll have a good show discussing all sorts of stuff around that.
Yeah, we are. Things are changing, man. They are changing a little bit. So we do have some exciting updates. It's not just like the market's going up, There's a little bit of volatility there. So we can discuss that in a little bit. But everybody listening should go over to our website, breakthroughreipodcast.ca. They can get all of our past episodes from there. They can interact with our guests through the show notes and get access to any materials that our guests have left for us on there. So breakthroughreipodcast.ca. You can also get our free gift.
Yeah, the ultimate strategy for building wealth through real estate. And of course, like you all know, you get on our email list when you do that, and you will hear about everything else we got going on, and all the updates, all the maybe events we got coming up, webinars, whatever we're putting out there, you will hear about it and never miss on an episode.
And please go over to iTunes and leave us a rating and review. You guys know that helps. It doesn't take too long. Go over there, tell us what you think. Leave us a 5-star review. That always helps. And more people will be able to hear the show. More people, when they go on and search real estate investing podcasts, ours will pop up and they'll be able to hear all of our past guests and all the info that we've shared over the past 8 years. Right, Sandy? Going on over 8 years now. We're still here. We're still going strong. And we're still excited every single time we get behind these microphones. So
yes, sir.
Keep listening.
Keep listening, keep growing. I think we're, what's fun. We're doing we've gotten lots of transitions over 8 years in different ways. And, we're ramping up if nothing else right now. We're not slowing down. So we're going to ramp up and keep pumping out more shows.
That's right. And just like always, today is no different. We have an exciting guest. And Jesse is back. He was our guest on episode 126 in September of 2020. So we're excited to hear the progress that he has been doing since then. He's been doing a lot of exciting things. So we're going to be hearing about that. And we're really excited to have you with us.
Thanks, guys. Pleasure to be here. Good to see you guys again.
I didn't want to mess up your last name, so I just didn't say it.
No problem.
I think Fragale. I think we can hit
it. You
got
it.
Fragale. Is that right?
That's it.
I'll do a quick little backstory on who you are and that, so our listeners can recall if they missed out on episode 126. But Jesse Fragale is a commercial real estate broker and investor. Started investing in student rentals we're over 10 years ago, I guess, on that now, and been investing since then. Single family homes, condos, etc., and definitely into multifamily apartments, and we'll talk a little bit about that with him today. He's also got his YouTube channel. He's a contributor on Bigger Pockets. He's got his podcast growing. It's called The Working Capital, and certainly has some insight to share over the commercial landscape, as well as he's, like I said, a commercial broker in the lovely city of Toronto. And of course, we've seen some major interesting stuff happening in that world over the last couple of years with COVID. So we'll talk to him about all these things and more in the show. So yeah, welcome again, and happy to have you here.
A pleasure to be here. It's pretty amazing. 8 years, guys. Congrats on that. That is I feel like I don't even think I was listening to podcasts 8 years ago, let alone knew what they were.
You were too young back then. Is that it?
Yeah, in the mid-20s, it was too young to get into podcasts.
Yeah. Well, why don't we start with a little bit of backstory? I know if someone's listened to your previous episode, you probably heard this, but how did you get into real estate in the first place? What brought you here?
Yeah, sure. For any repeat listeners, I won't bore them and go into super granular detail, but I got started in Waterloo. I went to school. I went to university in Waterloo, Ontario. For those that don't know, it's about an hour and a half west of Toronto. and I started renting out student housing out there. So that's how I got my first. That's the area that I started originally, and from there, continued to do that. Finished my degree, worked in Toronto, and eventually shifted from the student rentals that I kind of built up from there to different areas in Southern Ontario. Switched from buying those into buying condos in Toronto. And, if anybody knows the Toronto market, even now, especially back then, it was a bit of a hockey stick graph, continues to be. Prices were going up quite a bit. And at the time I was doing some assignments of condos. So for, any American listeners, typically you'll hear the term wholesaling, but basically selling the contracts of condos, which at the time you had to be really careful about because, the CRA was just, the Canadian Revenue Agency was getting very particular on how this income is treated. So from there, I switched my geography to Toronto and started buying assets there. And then I worked with Avis & Young Commercial Real Estate, met my partner John there, and we started buying multifamily apartments. And the first one that we bought was in Hamilton, which again is west of Toronto, about an hour. And from there, I think we talked a little bit before the show, bought our first deal that we raised capital for, and that was in pretty much downtown Toronto. If you're from Toronto, you'd probably call it Midtown, but for those that don't know the city, it's pretty much right in the city.
So let's dive into that deal then. Like one of the things that we like to do here is talk about some of the big challenges, right, involved in something like that. So that's a massive undertaking. First of all, raising the capital and then finding the right building that's going to, have the return that your investors want. So there's all kinds of challenges in there.
Yeah, I guess you could start with the first one and finding the property. There's, seemingly continues to be quite a bit of capital out there. Deals are harder to come by, good deals. So from that perspective, it was pretty much the same program that we use in brokerage in finding clients. You're looking for off-market deals, and this particular deal was an off-market deal. I used the resources that we have available, for those in Canada, whether that's the land registry or you're lucky enough to have access to corporate searches and, software like CoStar. In the States, it would be, Secretary of State to find owners. And then from there, it's just a matter of calling owners and seeing if they are open to selling. I found that there's a lot of owners out there that will maybe not necessarily take a lower price, but some will take a lower price if it means that they're just dealing without marketing the property, without going through the hassle of bringing it to market. Sometimes it's the anonymity of not, every single person knows you're selling your property. So it was really just an old-fashioned cold call. I said, Jesse Fragale, I'm an investor in the Toronto area. Passed by this property today. I just wanted to see if you consider selling. And we kind of went back and forth, and that was how we initially took down the deal. So, number one, it's always great if you can find off market. Once they're up on MLS or wherever people are marketing, the value is pretty much eroded from the premium you pay on it. And then from there, we knew that we wanted to raise capital for it. It was just under $4 million. So it wasn't something that it's right on the cusp, I would say, at least from a Canadian perspective, on if you would need outside capital. But what we wanted to do is get practice at actually raising capital, because really all the process that you go through, creating, in our case, the corporate structures, the limited partnership agreements, going to others to talk about the investment, creating a information memorandum that looks good and, that you can actually sell it to investors. All that is the same, whether you're buying 5 million or 30 million, and we see them in brokerage. So for us, we wanted to cut our teeth on this one, raising outside capital. And that's what that's kind of the process that we went through for this one.
So did you have the deal first, or the raising capital part first, or how did that work out?
Yeah. The chicken or the egg, there's a bunch of resources online. You see it a lot more in the States now, syndicated deals, and you're starting to see it more in Canada, people syndicating deals. For us, what we did was, the process I wanted to follow was not have actual signed commitments from investors, but soft commitments that I kind of looked at people that I did my MBA with, people that I did, went to university, friends from, high school that I still connected with. Basically, if you go to your iPhone or whatever phone you have, I just know because I have the iPhone, you go to your phone book, you scroll all the way down to the bottom. That shows how many people are saving your phone. It's pretty crazy how many people you actually save. And you can export that to Excel. And literally, I just emailed people that I just described. I said, hey, if you don't know what I'm doing in real estate, a lot of them did. We're starting to look for properties to acquire, manage, and we're looking for investors. This is the type of property. So we had kind of a model property. These are the type of returns we're going after. And if you're interested, do you want me to let you know if we do come across a property like this? And if not, no pressure, basically unsubscribe type of thing, where if you don't want to be involved. So through that, we got a lot of interest of people that gave us kind of a soft commitment. But then when we actually went to get the deal under contract, we definitely gave ourselves a couple outs in terms of financing. So to answer your question directly, deal under contract first, then investors. But it wasn't like we didn't even think about investors until we put the offer in. It was definitely part of the process.
Cool. How much were you raising or you don't say exact amounts, I guess, but how many investors were you bringing in? Was the intent to bring on dozens, or was it like one or two?
Yeah, the intent was so part of it was to not just make it like a partnership of 4 people, because then it kind of defeats the purpose of what we're trying to, start to practice. I don't know the exact amount, but it was probably, I think with the GP, like with ourselves, which are my 2 partners, probably around 9 or 10. And it wasn't supposed to be that high either, but we had a couple investors that we really wanted to get in the deal. And it was right when we were at the end, it was tough to getting to the halfway mark. That was easy. Then like getting that extra bit, like really stretched for it. And then in the end, we had a bunch of guys that were a couple guys that were just like, yeah, no, I want to get in. And we had to fit them in. So we basically had to go back to some investors and say, listen, we want to get this other person in the deal. Would you be cool with, having a $75,000 investment instead of 100? So that's kind of the process we went from there. So it wasn't just 1 or 2. We wanted to raise like a normal limited partnership.
Cool. And, I think a lot of people are surprised. Like you said, it's pretty, in a way, kind of made it pretty simple. You just went through your phone book and asked people, which is people a lot of times are kind of scared to do that. How did you like, what type of people ended up coming in on this? Are these like, super rich uncles or something? Or are they like everyday kind of just homeowners that have home equity?
So, for those that, like from the outset, I'm in commercial real estate. So there were a few of the guys in the industry, surprisingly not as many as you would think. I think we talked about this last time. I'm always surprised, how few people in our industry invest in our industry. So the type of individuals, what we did in Canada, you have a couple exemptions that you can use to get outside of having to file like you would if you're IPOing a stock. And those, what they're called prospectus exemptions. One of them is friends and family. The other one is accredited investor status. So we were going to go specifically with accredited investors, but we noticed that there was a few of the guys that we had invest that were kind of on the border. And for that status, you have to meet a certain income threshold in a certain amount of time. So for us, it was not really like super rich guys. Well, I mean, we had a couple hockey players, but that wasn't because like we were searching for high net worth individuals. That was like word of mouth, because our industry, there's just a lot of ex-hockey players and so good connections there. But generally speaking, it's accountants in Toronto, real estate brokers, a couple other finance guys, like not some rich old dude that has millions of dollars. So it was pretty evenly split. We went in with 75. I think 75,000 was the minimum investment.
Awesome.
Which, if you think about it, I mean, if you're going to buy something on your own, I challenge you to be able to fund it with 75,000. So this is an exciting deal for a lot of people, in that position.
Yeah. I think for a lot of the guys, like they wanted to get into real estate in some capacity. We're all, my close buddies were all in our kind of, late 20s, early 30s. And it's kind of that part in the career where they're starting to make pretty good money. And, they don't want to go do what we do, and actually own the property, speak with property managers. They just want to be connected with it in some way. And this is a route for them.
Okay, so now let's talk about the building itself, right? You've found the deal. You must have some kind of a plan for increasing value. Let's talk about that.
Yeah, it's like the Canadian landlord landscape. I know it should be a book or something, but it's pretty challenging for landlords. It's definitely a tenant-centric market. But that being said, there are ways that we can add value to buildings and do it properly and make sure that our investors are taken care of, but you're also treating tenants with dignity and doing everything above board. So for us, the area that we bought is it's a place called it's the intersections of Bathurst and Eglinton, Toronto. So for anybody that knows, it's pretty much in the heart of Forest Hill. And Forest Hill, I think, probably some of the most expensive homes in Canada in this neighborhood. So part of the appeal of this property was the fact that the rents were way under market. And what we thought, or we came into our plan, was we could take these to condo quality. And by that, I just mean putting washers and dryers in the units, dishwashers, the creature comforts that a lot of people take for granted, but in a lot of rentals, they don't have them. And basically turn over the suites and put them into where we would class like a high-end rental. So we had to pivot on that because we closed the middle of last year. So we're right in the middle of the pandemic. So for us, it was, okay, that high-end market. And if you guys remember, rental rates were going up, and then the pandemic happened and they kind of plateaued. So for us to be able to get the high end, the thesis didn't really work from our vantage point. So what we did was, okay, instead of spending $75,000 on a suite turnover, we spend $50,000 on a suite turnover, but we turn them into B class, not super high end, but B class, and where we can still get our return and we're not spending a crazy amount of money. So that was the strategy going in. So since then we've renovated one suite. We're working with tenants right now on the other suites, and just anticipate the question about dealing with tenants and how to come to an agreement to actually get the units, because we did buy these fully tenanted. And part of the art, not science, of Canadian real estate investing is working out an agreement with the tenants if they're willing to end tenancy. And it's you have to be very delicate about dealing with that, because, for listeners that don't know, you can't just kick a tenant out because you're at the end of a lease. That's not the way it works here. So that, is something that we're navigating, and we have for the last 6 months.
Yeah, one of the beautiful parts of investing in Ontario, at least, is that landlord's tenant stuff. Lots of opportunity in it, I guess, is the positive part of it. If you can navigate your way through it, but it's also a deterrent at times. So
yeah, I mean, it can be tough because you've bought the building with the rents significantly under market, what they should be, and nobody in that position is going to be like, yeah, I volunteer to just leave, right? Like they know they're going to have to go find something else. It's probably going to cost them more. So the whole thing is to work out a win-win situation for everybody, so you can go in there and renovate those suites.
You had a few tools that you mentioned before. I wanted to ask you about CoStar and some other ways of finding deals. We kind of breezed right through it, but I think there would be some listeners that might have gone, "What the heck? What's that? How do I use that? How do I use that to source deals?" Because that's the everyday dilemma with investing in real estate. It's not necessarily the capital part, which is that's one thing, but it's finding the deals is always the hardest part. How do you use some of those tools you mentioned?
Yeah, 100%. Like I said, for listeners that have the benefit of tools that a lot of the guys and gals in our world in brokerage take for granted. So we use CoStar quite a bit. CoStar, tracks pretty much almost all of the commercial real estate properties. So multi-res, retail, industrial, office. So a lot of times if I'm looking in an area and I'm trying to find the owner of a building, I'll go directly to CoStar, look for the numbered company or the individual. I guess if you're looking purely on the residential side, you'll find individuals. But for us, a lot of times there's that extra layer that we have to go through, and it's typically a corporate name. And then from there, the corporate searches, I believe you can pay for them online. Again, a nice benefit of being in a brokerage. We can email somebody in our brokerage and say, can you run a corporate search? And all that means is that the corporate veil of the numbered company, it'll just show who the actual individuals are. And then taking that to the next step, whether it's Canada 411 or you're trying to figure out based on the address, what the actual phone number is. Sometimes you just can't find them and you just have an address, and we've snail mailed stuff before too. And, especially on the brokerage end, you're just like, I want to connect with them and we cannot find a number for the person. Sometimes your only option is mail. So that's like if you're going the CoStar route. Again, if you have access or you have a friend that's a broker, then you typically will have access to stuff called RealNet and RealTrack in Ontario. I think it's specific to Ontario, but I'm sure every province and state has something similar. And in that case, you're looking up the actual record of the last sale. So it will typically show the stakeholders. A lot of times it'll show the banking, if it was paid for in cash. And I think RealTrack was actually purchased by Altus, which is another company similar to CoStar. I think that was fairly recently. If you would probably know Sandy. But
I know because we use RealTrack a bit too, and it's also, it must be
Altus Studio or something now. Yeah, I remember logging in and being like, what the hell is this? But
it's a good tool.
So that's the route that I would typically take. Now, if you're an individual that, you don't have access to the majority of these things, there's different avenues you can go. The land registry is one of them. And if you go in any city, you can Google the land registry for ownership. And then you kind of have to follow that same process. The challenge for most people, especially if they're looking for commercial and they're not associated with any brokerages or they don't have a realtor that they're working with, is the fact that the numbered companies, there's very few tools aside from actually paying for corporate searches, which you can do as well. There's a bunch of online places that you can actually buy corporate searches to figure out who the owners are. But at the end of the day, you can always, you can still drive for dollars and find properties you like, figure out what the address is and go that route as well. Mm-hmm. But yeah, that's kind of the process I use.
And City Hall often has a kiosk where you can just sit down and do a registry search.
Yep.
I know you used to do that. We used to talk about that, Rob. We used to do that in Oshawa.
Used to do it all the time.
Yeah.
Yeah. I moved to Hamilton and they wanted to charge us for all that crap. So I kind of got annoyed by it. But every city is a bit different. So some of them are really easy and open source of info. Some of them are a little more holding it hostage and want you to pay or want you to go through hoops to get it. But, whatever you're willing to do. If you got to go through a couple hoops, that just means there's probably more opportunity on the other side.
Yeah. So do you guys still do, will you go through land registry or do you guys now use different software? I know you guys, Sandy, I know you do a lot on the residential side.
Yeah, we use RealTrack though a lot for the multi-res. We've been using that for a couple of years, I would say. Once I found out about it, we've done a few deals from it. It's you got to go through the work after, like just finding the info is one thing, but then working through the call list and it is quite a bit of work, which is again why there's good opportunity at the other end of it. But RealTrack's been pretty good. I mean, I think for us paying for it was roughly $5,000 a year. I'm not sure if that financial element's changed now with their setup, but there are some real estate boards even that have free access to that. So depending, that's one of the perks you mentioned. Some of the perks of having a real estate license or being a part of a brokerage. There's also real estate boards even that give you. I know there's a few that have free access to RealTrack. So
yeah, we had a few of our. So I work in kind of investment sales in the office, but our actual multi-res team in our brokerage, they've a lot of the younger guys have had a lot of success on RealTrack. They've and it's probably because CoStar is so crowded now because it's easy. Like you can type into CoStar this property and then you get the information. But if every other broker is chasing the same thing, that's where RealTrack, if people aren't using it as much in our world, that's the benefit. But like you said, it's one thing to get the information. You got to do the other 70 or 80%.
Yeah, make the calls. Sometimes it's all the non-glamorous stuff.
Yeah.
My last 3 or 4 deals have been MLS deals that nobody wanted. Generally stuff that I showed to my clients over and over and over again. And nobody was taking it. So I'm like, okay, well, there's a deal here. I guess I'll take this one.
Was that because there was the concern that if it's on MLS, it's not going to be a good deal, or?
Oh no. I mean, hey, that's what I do, right? Like I'm a realtor. So my clients are buying stuff all the time. It would just be, so I've always been not necessarily property first, but like when I find something really, really that I think is really juicy anyways, I'll push it. Right. And so those would typically be the ones where my 10-bedroom student rental in Peterborough that's up and running now legally, got all the, everything's above board. And I mean, I showed that, I would say at least 20 of my clients saw that building. And it was just, maybe it was too daunting. Maybe, I had more vision than the people I was showing at the time. I don't know, whatever it was, but, over and over and over again. And then just going, okay, why does nobody want this? Like it's a gold mine. So, stuff like that.
Yeah. Yeah. I'm pretty bullish on student res again. I feel like it's going to come back. I know not everybody, I think conventional wisdom or a lot of individuals just thought, the pandemic, that's going to be the end of schools. And I was getting called from Waterloo, Wilfrid Laurier University in Waterloo. They were calling me and they were like, Mr. Fragale, do you own a property on Marshall Avenue? I was like, sold that like 6 years ago. Oh, okay, our records indicate you still own it. I'm like, what's the call for? And the individual was like, we're desperate need for housing for students. So like they're trying to go the private route and get students that I guess are oversubscribed on residents to housing. And that's one data point, but even in our brokerage, we've started to sell more student res. So
yeah,
I think it's coming back.
It's interesting because I think during that time too, at the height of everything, right? They in the actual dorm rooms on campus, they were doing this distancing thing where, let's say the unit had 6 bedrooms, they would go, okay, now we're only going to put 3 students in there. So which made everyone else more desperate for outside accommodations, which worked for us. I've heard like both sides of the story from different investors in different areas and student rentals, but ours, luckily, we didn't really have a hitch in Peterborough. That's where ours are.
Yeah.
Lots of interesting outlook on the market and everything. Why don't we talk a bit about that on the commercial side? Why don't we hear what's been going on with that in the last couple of years? I mean, we last chatted, it was kind of starting of COVID, and probably everyone was worried about commercial ever coming back, or office ever coming back. Now we're kind of rolling into hopefully the ending here of everything. We'll see. What's changed? What's going on in that world?
So the commercial real estate, like to take it from the 4 major asset classes, what we've seen is, multi-res has continued to do well. I'm sure it's not a surprise to anybody that asset class has been one of the darlings of the industry. There's still rental appreciation. We're seeing a lot of investment go into apartments. So really it's, again, more and more capital chasing less and less product. So you really have to kind of work hard to find that product. But that is definitely a sector that boosted or kept a lot of these commercial firms' income or profits high. Industrial was another one. Who would have thought you'd have a global pandemic coincide with a lot of shoppers going online to begin with? So a lot of these last mile delivery locations started getting built like crazy. We're still in a huge supply constraint on the industrial side. We were low before the pandemic from a vacancy perspective. I think Toronto was number 2 in North America. I think they were number 1, or anyways, we were right up there, and now we're sub 2% again. you hear 1%, 1.5%. So industrial has been crazy. Retail is, since we last spoke, retail, a lot of people are like, oh, retail's not doing that great. And it's not necessarily true. Like I always say, when you have like Joe's Taekwondo or, Stacy's Nails, you have those type of plazas that don't have any grocery store anchored aspect to them, or you don't have any essential service aspect to them. Yeah, those have struggled. But over the last year, there's been a lot of opportunities and assets purchased with those essential services and grocery store anchored that institutional and private capital are putting money into. So I think that's going to remain strong. It just has to be fundamental because, the States is overbuilt and we're not at that extreme, but we overbuilt retail for years and years. And then, the question mark on office is, it will be interesting to see how this one plays out because, to Rob's point, in student res where you have people distancing, and same thing in office, it's like, as a company, number one, are we going to go back to the office? Number two, if we do go back to the office, do we need less space or do we need more space because of distancing? And, this conversation was happening over the last little while. I can say that it definitely got to the point where a lot of people put inventory onto the sublease market. For some context, in our city, we have normally 600,000 to 900,000 square feet on the sublease market. I think in COVID, we peaked at like 3.3 million. So that is a lot of stuff going on the sublease market. And a lot of that is like a knee-jerk reaction from a CFO or CEO that's like, all right, well, put it on the sublease market. So we've now come back down. I think we're now in the low twos. So from our perspective in brokerage, that's going in the right direction. We look at that as, normalizing, or have individuals that are getting a little bit more clear on what their plans are in the future. But I think this is a net positive. Obviously, if you're in brokerage, if you're not glass half full, it's gonna be a challenging time. And for me, that works in office. A lot of what we do is in the office space. This was something that, if you've been in office for a long time, you saw this trajectory happening before COVID. This hybrid working, Zoom. We now know so well. This was something that predated COVID. It kind of pushed us into really determining why we occupy space. What is the office for? And I'm sure, even you guys probably see it with the businesses that you work with, or even in brokerage. You start asking serious questions of what is the office for, and what is, can we work in other ways? And from our clients, some of the answers were, we don't need to be in the office for this. And other clients were like, 100%, this aspect of our business, we need a physical location. So that's kind of the upshot of, I'd say, like the major commercial sectors.
Interesting.
And would you say that those ones that sort of the ones that said, absolutely, we need an office, those are the ones that have basically brought those numbers back down? And do you think that now there's going to be more sort of changing their minds on that? Or do you think we're going to sit sort of right around where we are now, and that's sort of going to be the new plateau?
There are a lot of offices that right now are still sitting vacant because, we had so many false starts, especially in Canada, Toronto, right, specifically for us, where, we're back. Oh, no, we're not back. And I don't want to say, there's the quote, this time it's different. And I don't want to be that bold, but one of the things this particular time is that we have indication from the city of Toronto that they are going to be occupying their offices in March, the end of March. So they usually don't say anything unless they're going to actually do it, because it would just look really poorly on them. And that wasn't something we had over the last year. We didn't have the city or any leadership really give clear direction. Like when we opened up again, a lot of the direction from the province was, all right, we're opened up, but don't go crazy. And businesses are like, what are you doing? You're killing us. Like, we're on Queen Street, we're a retail shop. You tell them that you can leave your house, but tell them not to everybody go shop. So I think this month particular, because just recently we are now allowed to occupy without a passport. We are going to be able to unmask in a week, and then the city is giving the business community direction. What you started to see after that is banks starting to put in place their policies, because what I've learned over the years is that legal teams love to just point to other reasons why their decision made sense. And, you know, you have a legal team at a big bank that's like, well, the city of Toronto did it. So, you know, as
Right.
silly as that sounds. So I think TBD on how the recovery happens, but I think that it's going to be healthy for the office market because it's, as you guys know, it's not just about the tenants the landlords. It's a tenant landlord market. And I think for a long time, it's been very unhealthy for the tenants.
I find it odd, Jesse, that you should expect leadership from the leaders.
Yeah, it's a crazy
I've learned over the past year and a half that that's just not going to happen.
Yeah. Well, you know, direction is, you know, not even leadership, just a little bit of direction would be a helpful piece for us. But, you know, that's kind of how I see, you know, the next year going in terms of, you know, continued investment, because money is still very ubiquitous. Like we have a ton of money circulating, but it's always that inverse relationship. It's like, you got to find the deals now. And then, you know, when the deals are everywhere, there's no money. So
that's what we talk to a lot of clients or just people that we're talking to investments is like, you know, anyone waiting for the next opportunity, the next buying market or whatever. It's, and maybe there's a slight bit of that. Even I don't know if it's a window right now or if it's here for a little bit of a few months or whatever. But there's a little window. It feels like almost today, actually, as we're sitting here. There's been a couple of weeks of where we've been having these conversations around, hey, if you missed and you hadn't bought in the last couple of months and you really want to or need to, like, now is an amazing time. And it's so funny. Every time this happens, the pushback. There's always another reason to push back, and now they're all scared because everyone else is scared. So you're like, well,
if you're dealing with somebody that has that mentality in the first place, like the person that's like, oh, I'm going to wait and see what happens, that's going to be just heightened in this climate. I think, you know, it's not going to alleviate any doubts or fears just because the market's dipped a little bit. They'll be like, oh, I'll wait and see if it, you know, continues.
Yeah.
What
have you guys seen on the residential side? Has that market is that bifurcated between homes and condos? Has one done better than the other?
I mean, detached and not condos, take away them, but everything else is definitely cooled a little in the sense that it's only cooled in the amount of offers, amount of action on the house. It's not cooled in terms of price, really, from what we've seen. Prices that, you know, we've just hit that level where people have gone. Now we're past everyone buying for hundreds of thousands over asking every time. It's still happening, but not every time, because now people are listing at already the hundreds of thousands over. They're not listing at the where we were 2 months ago. So I think. Yeah,
I always found that amazing with residential real estate. My mom would call me, be like, this place, it sold for $1.5 million. I was like, okay, it was listed at 600. I was like, well, it shouldn't have been listed at like.
No, you know, I know. It's so silly. So now they're listing at $1.5 million and they're just selling at $1.5 million, or they're selling at $1.47 million, or they're not getting 10 offers or 20 or 50 offers on offer day. They're getting one or none. And then they're, you know, people are buyers in general, a little tired of all that crap too. So, you know, that being said, we had one of our, just in the past few days, we sold the fourplex here in Hamilton that went nuts, went like $500,000 over asking. We didn't expect that. We expected maybe 100 and change over. It went way over. And like, I don't know. I think that multifamily investment market is still really, 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 really hot, whether that be small multifamilies or bigger in the apartment building style. Like there's still a lot of money out there to invest in that. People that own real estate for sure have made a lot of money and they need to do something. And they look at real estate and go, well, I made my money in real estate. I guess I'll reinvest in real estate. I think that's a pretty common mindset out there. So investors are going nuts still. And I think the single family first time home buyers and stuff are a little tired and maybe feel like they missed out and probably.
And now might be the time for them to jump back in because, like you said, like seen a drastic reduction in the amount of showings over the past, let's say 3 weeks even.
Yeah.
And I think that's a good indication that now might be time for those people who have been sitting there or feeling a little defeated, you know, maybe to jump back in.
I was a little surprised during the pandemic where people were, saying the thesis was, okay, everybody's leaving cities where, the condos are dead. And I was just kind of, first of all, I was surprised that was you're hearing that by these, talking heads or people that are supposed to be experts in our industry, when my thinking was good cities, like quality cities, whether it's New York, Toronto, like the city is really where everybody comes for efficiencies. And even now, like condo prices, at least like in my building, I think there's been a couple record condo prices in the building in the last few weeks. So it seems to me that condo is still a huge demand, unless I'm totally misreading it.
I think at the rate at a standard sort of priced condo, like if you get the more expensive ones, there's definitely a little slower, but an average price condo for sure. I mean, we're seeing new builds in Hamilton now over 1,000 square foot, which is new for Hamilton, not new for Toronto. I think Toronto were more 1,500 square foot maybe, or up in that range.
Yeah,
so some of these, a Hamilton market at 1,000 per square foot is seemingly crazy for condos. They're going to sell. They're selling. It's not like they're not going to sell out. They're going to sell out for sure.
Yeah, it's crazy, but people are still buying them. And like the developments in Hamilton, because there's a few condo, I think, so Brad Lamb had a condo development, and are there a couple other?
Television City was his big one, which has been in a few years in the works, which is why it had maybe a little more hype around it than some. But a lot of the Toronto developers for sure coming that way, and I know Hamilton's not probably alone in that. There's other markets that have had some version of that, like a Kitchener-Waterloo or London. I think there's definitely a lot more to come. I mean, Hamilton's going through a condo explosion. That's been a few years in the making, and certainly more to come. They're doing the whole waterfront developments, all that sort of stuff. A lot of the Toronto, because I think it's just tough the numbers are tight in Toronto. I mean, I've heard Toronto is about as tight as any market in North America in terms of building and developing those types of products. So
you say, like, how many times have people said, myself included, where it's just like, if I was just out of school right now, I wouldn't be able to afford the place that I live in. If very difficult to get into the market at this point. Like pre-construction, I always thought was a great kind of way to get into, break into a market, because you have a bit of a forced savings plan, especially if you're younger. But it's typically a little bit more achievable to get in when you have somebody, saying you got to make this payment every 60 or 90 days, whatever that is.
Yeah. Now it's, you're getting into certainly over $500,000, if not up towards $1 million, even in some cases. So it's really hard to get in at that point now. It's hard to say. We could be, by the time the show airs, when we're sitting here reviewing this, we could be, this all could change, right? A lot of things in the world, they're making changes happen pretty fast. We know the government, historically, government likes to intervene. So they could be jumping in here at any point and saying, we're changing the down payment amount needed on investment properties, or we're changing the, the dreaded one that everyone's worried about is the no more, we're taxing now on your sale of your primary residence. Like that could be that anything major like that could change the dynamic completely. So that's another reason why I tell people just get in, because you never know when anything could happen. And we learned in 2017, it's like a week's notice, and all of a sudden there's major changes that are going to affect.
You're such a broker, Sadie. Any reason is get in. You heard the news, get in. But no, it makes sense. We've had, like, the capital gains thing is something that has come up with investors, like interest rates too. But it's funny, like it is something that people think about, like that aspect of the business, and not even just capital gains on principal residence, but for our investors it's normally investment properties where they're just increasing. I think Trudeau mentioned, I don't know if it was like in the middle of last year, of increasing the actual inclusion rate on even investment properties. So it's definitely something people are thinking about, I think, across the board. It's not just interest rates, it's definitely tax policy. But like you said, like anything can change. There's a global pandemic, there's a war in the Ukraine, like a couple things change and everybody needs to pivot.
Yeah, and I mean, it's almost impossible now for us to stick to this, but Sandy and I, sort of started out saying, okay, we're not going to do like market updates and stuff like that, because, we want to stay timely if someone listens to this down the road. But what I do think it'll put some little, like, little bookmarks you know, in history. And it adds like a way of saying, okay, that's where they were then, here's where we are now, and sort of how has it changed since then, right?
Yeah.
So
yeah, you notice when you do 50-minute podcasts, it's really hard to have evergreen content. You know, so, like somebody's saying something topical, and you know, something's going on this month or this year.
Yeah.
speaking of topical, why don't you tell us about your podcast?
Yeah, sure. So Working Capital, the real estate podcast, that's the name. I started it. It just coincidentally, the first episode started at the beginning of COVID, where people were like, "Oh, that's great. You know, you're doing stuff to keep yourself occupied." But it was like, you know how podcasts are, they don't just come out like that. You actually have to prepare. And I think on the last episode, I kind of bent Sandy's ear. He helped me out at the beginning. I'm like, you know, when you're not in your world, it's like, where do the podcasts live? Like, how do I click a link? Where does that link come from? So for the podcast, I think we're close to 100 episodes now. I haven't taken a week off, so I've been pretty happy to be consistent. You know, it's like going to the gym where you know, people are like, I don't have time, but if you make time, if you're committed to it, and it's very selfish of me to bring on, you know, people that are a lot smarter than me and get to talk to them for 45 minutes. And I'm sure you guys, you know, same thing where, especially being in brokerage, you know, I have access to a lot of individuals that I have no business having a 50-minute conversation with, that are, you know, high up in our industry, but can give great advice to listeners. So for me, the way I kind of summarize it for individuals that are curious of what it is it's focused on real estate investors, but it comes from all different types of guests, you know, from lawyers to actual investors to people that are, you know, tax attorneys or just accountants. So for us, it's really kind of holistically looking at it. And, you know, just a small example, we talked about raising capital at the beginning of the show, you know, having somebody on that's actually a securities lawyer and kind of walks through what that process is, and, you know, obviously get legal advice, but can give you kind of an understanding of that aspect of the business. So yeah, that's it. You can, I mean, Google it. It's you can go to workingcapitalpodcast.com if you want to check out any of the recent episodes.
And obviously we'll put that link in the show notes.
Definitely got to be. You raise an interesting. Just there's been some news around that, people getting in trouble with securities and stuff like that. You definitely want to be careful and know what you're doing when you're getting involved in that sort of side of raising money and making sure it's, you know, just. I don't even want to say stuff because I don't want to give advice really on it, but you got to be careful. Just make sure you know what you're doing.
Everything we say on the show is our opinions only, and our experiences, not legal advice.
Yeah, but
is that what you're trying to say, Sandy?
Yeah, nailed it.
Even on the investor end of things, like not even just the legal piece, but obviously you owe a fiduciary responsibility now. And for people that don't work in brokerage, maybe that might be the first time they're doing something like that. But one thing I have found is it's not for everybody. Some people investing on their own, bootstrapping their own properties, or maybe working with one or two partners is the way to go, because there are stressors that are involved in capital raising that are not involved when, you know, if John and I, my partner, we own our property, let's make an executive decision to do this. For us, that same decision, we're thinking about 10 other people, or, you know, 50 other people, whatever your investment is. And it's something that is definitely a different way, because you're kind of a steward for these investors. So it's definitely something you want to be careful of just jumping into. Talk to people that have done it before.
Totally different mindset. Yeah, it's like owning a private versus public company. It totally changes the way that the leaders of the company or the investment make decisions. It changes the whole mindset. Certainly lots to talk about that we don't have time to get into, but definitely go check out your show. That's awesome that you've built out that much content. I think that's one of the things that's, you know, any real estate investor, anyone in business of any kind really could really benefit from, is going and interviewing people. Like, that's like the easiest way to learn and grow yourself, but also provide value to the marketplace. Is a lot of people are really, really excited to get interviewed, and doesn't really much matter who it is talking to them about it. If you know, you invite someone to come into your blog, into your show, into your videos, into your book they're writing, magazine, whatever, it's a pretty easy way to get access to people. It's a great way. So, you know, we're kind of encouraging the competition with that, but a lot of people should get into that. I think that's one of the most underutilized versions of kind of business growth in general, right?
Yeah, 100%.
Jesse, what's next for you?
So we didn't touch on it here, but I purchased a property, a townhouse in Florida. And part of the reason I did that was I wanted to, start actually, again, do the training wheels version of investing in Florida on the small scale, and then figure out maybe in a year or two if we want to raise capital to buy stuff in the States. So that will probably be something, I do in the next few years, or hopefully expand. But yeah, we'll see. We'll talk to you in a year or two and see where we're at.
All right, that
Cool.
sounds good, man. That sounds good. Costa Rica, any thoughts of investing in Costa Rica?
I'm gonna have to bug you about that. That's pretty cool that you're down there now.
So many
it's been
people.
exciting.
I don't
That's
know if they're
why
following you, or you're following them, or whatever. The pack is just going. I know so many people going that way now. It's exciting.
Yeah, there's been a lot of interest for sure.
Yeah.
And it's been exciting so far, definitely, to spend a whole winter, not in the snow.
Yeah.
It's been a different experience. So, okay. So Jesse, what is the best way for someone to get in touch with you?
They can get in touch, workingcapitalpodcast.com, or at Jesse Fragale on Instagram. It's funny. I spent a lot of time there. People will DM me, and oftentimes that turns into kind of an email conversation if it's more formal. So Jesse, Jesse Fragale. You can look me up. And if you have any questions about real estate, don't hesitate to reach out. I'm always happy to help.
Are you still looking for investors for other projects?
Yeah, we're always keeping investors kind of interest because we're always actively looking. It's just, like we've talked about, it's more so finding the right deal. But when we do, definitely, if you're interested on that aspect, happy to have a conversation.
Awesome.
Perfect. And again, those those points of contact will be in the show notes for Jesse. Anyone that missed that can just go back in there and they'll be able to contact him through there. Sandy, how can people get in touch with you?
The easiest way now is just through social media for sure, or Sandy at freedomreps.com.
You can reach me at rob@mrbreakthrough.ca. Thanks for joining us, everybody. We'll see you next time.